Well, I think when we dig through some of the details, we're going to see that it's pretty messy, particularly given that the
Yeah.
economy was shut down for almost half of that 3 month period. Now, the president says it shaved off about 2 points. The BEA says it shaved off about 1%. So we know that there was a significant damping down effect, regardless of whether it's 1 or 2 percentage points. So parsing through some of the details, I think the more important figure to focus on right now to really gauge the underlying momentum of the economy is let's strip out inventories, let's strip out trade, let's look at real final sales to domestic purchasers, which rose at 2.4%.
Yeah, I
And this is
saw
more
that.
in line with what we
Yeah.
saw in the third quarter at 2.9%.
Paul, that's brilliant. And I really, really buy this angle from years ago at Fidelity with Bettina Dalton. And the bottom line, Paul, is that's a pretty good number.
Pretty good number.
Yeah.
I think it's a pretty good number. And how about the inflation outlook there, Lindsey? If you're given that the economy is growing at a solid rate, what's the inflation story on top of that?
Well, as you know, I have been long concerned about inflation and the Fed's lack of focus on inflation. So we see this pick up to 2.9%, and that is in the wrong direction. We don't see this ongoing improvement of disinflation that the Fed remains very optimistic that we're going to achieve, getting back to
Yeah.
2% as they forecast by 2028. Now, any improvement, of course, is welcome, but I do expect inflation to remain elevated
Yeah.
nearer that 3% pace for some time, which will keep
Right.
pressure on the Fed to remain on the
She
sidelines.
so undersells it. I mean, she was my economist of the year 1 year, 2 years, 3 years ago. I can't remember. Lindsay with Jim Bianco was out front with Mohamed Alarian. You know what, folks? Inflation's going to be resilient. She
Yep.
nailed it.
So, Lindsey, talk to us about kind of how you think the Fed is digesting the numbers we had today, some of the labor data we had last week, the CPI data we had last week. How are they putting it all together, do you think?
Well, I think right now the Fed is looking at this moderate trend line in activity as a justification for their earlier decision to cut rates. Remember, over the past 2 years, we're now 175 basis points closer, or arguably at now that neutral level. But the reacceleration in payrolls in the latest report, the pickup as we saw this morning in inflation is going to really solidify now their position on the sidelines.
Yeah.
As we saw in the minutes yesterday, there were some members that were willing to consider a rate hike scenario. I don't think we're there quite yet. This is a Fed that has been willing to
Right.
tolerate above target inflation for years. So simply
Right.
maintaining this 3-ish% isn't going to move the needle. But they are sending the signal to the marketplace
Yeah.
that they're focused on inflation, and that should help rein in inflation
See,
expectations.
when you have a PhD in economics, you can say ish
Yep.
with quality.
Yep.
Lindsay, I mean, the bottom line here is it's a K-shaped economy. We're going to get all sorts of mail. You guys are nuts. You have no idea the struggle out here. After 14 minutes of analysis, how K-shaped is our K-shaped America?
Well, I would argue it's not necessarily a K-shaped, but more of an E-shaped recovery. It's going to be uneven, certainly. There is this dichotomy across classes, particularly as we see household net worth significantly increase for those at the upper end of the income spectrum as a result of a run-up in asset prices via the housing market, the equity market, a benefit which the middle class and the lower end of the income spectrum has not benefited from. But we do see other stimulants coming out into the economy, the One Big Beautiful Bill Act, averting a reset to a higher tax rate. This won't necessarily provide a windfall to spending, but it will help to maintain the current levels of expenditures across those different rungs in the E-shaped recovery. So uneven, yes, but not necessarily a K-shaped, where some are perpetually, I should say, doing better, and others are losing momentum.
How much of an impact are you expecting, Lindsey, from some of the president's legislation, the One Big Beautiful Bill? I mean, are you factoring that into your GDP forecast, your consumer spending forecast? How is that impacting things?
Well, we're looking at the overall impact on the economy for 2026 to be upwards of several tenths of a percentage point. Now, that doesn't seem like a lot, but again, as we're looking at an economy at a growth rate at 2.2% last year, any additional boost to consumers or businesses is a welcome step in the right direction. But right now, I think the biggest factor is going to be how much of a dampening effect does that overhang
Right.
of elevated prices take out of consumers' ability to spend out in the marketplace.
So help us here with what Alexis said, and she took her cue from the President of the United States. He's out with a tweet saying it cost 2 points. The shutdown. Lindsey Piegza, just back of the Stifel Nicholas envelope. How much do you add on to real GDP to get where we are now?
I think the president may be looking at this overly, it may be accounting a bit more for the shutdown than I would assign.
No.
I would say maybe in line with the BEA's forecast of about 1%. But remember, whatever we lost at the end of the year, we typically regain when the government reopens. And so if there was a 1% loss, we're likely going to see an even stronger 1% boost across the first quarter. Now, this time it is a little more complicated because we did see that second round shutdown, although it was much shorter and much less disruptive. But I would expect that to be reclaimed. Anything that was lost at the end of the year to be reclaimed, at least within the first half of 2026.